Let's take a look at the Asian markets as how they have opened this morning. It's been a slightly mixed start to the trading day.
As per the latest economic review of the Finance Ministry, they seem to be saying that a few important sectors in India can actually get impacted adversely because of the Red Sea situation.
The Nifty has opened with a cut of about 89 points. So after 3 days of gains, the markets have opened the holiday shortened week with a cut of about 0.3%.
So metals is clearly, as you rightly coined it, it's a dark horse trade, it's a contrarian trade.
And now finally, in terms of final regulations, what we have from the regulator is a watered version, a completely watered version of what had been proposed in December 2023.
The larger issue is the way credit is flowing and where we are not really sure of the end use of credit.
From 35-40 million in 2020, we have reached last month 150 million. I think we are headed straight to 300 million.
It's a bit of a tepid Tuesday morning, right? For our markets, lackluster moves coming in on the benchmark indices.
And as the market matures and there are more people who come in and understand coffee, there is a movement towards espresso.
Mid-caps really the stars of the day today, almost 500 points higher on the mid-caps.
Good afternoon. That was the day so far. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Nigel D'Souza and Surbhi Upadhyay in the house. Guys, it's been a tepid Tuesday. When you look at the benchmark indices, we've traded in a very narrow band. But the mid-cap action looks pretty heartening, right? The mid-cap index is up 1%, though the advanced decline ratio is still in favor of the losing side.
Well, that's right. And for the final hour of trade, the Nifty Financial Services Index, that's the one we're going to track. It's at around 20,700 odd. Can it get closer to around 20,900? Positioning is such that it defends at 20,650 on the downside. And maybe it can make a bit of a dash towards that 20,900 odd. If that happens, we'll see a good recovery. But quiet day and I think on expected lines.
Absolutely. I think for the large caps, the problem is there's lack of leadership. There's no one big star batsman that's coming together to sort of,
in fact, all the stars are under pressure. HDFC Bank, Reliance, ICICI Bank, Infosys, all these heavyweights are dragging the markets down.
Absolutely. You hit the nail on the head. And the underperformance that Reliance has been exhibiting, now that's something worth taking note of because it's gone into a bit of a lull. And it's not just today, it's been happening for the last several sessions. In fact, if we talk about, Reliance, after starting the year off on a very good note, suddenly it's quietened down in the month of March. Not much has happened. Though, of course, for the year to date, that is calendar year, it's still clocking a 10% gain, outperforming, of course, the benchmark index itself. But Reliance has gone into a pause. Banks are anyway sulking. And IT is not telling us much. Remember, that's the question that we were asking at the start of trade as well, whether the whole correction, cool-off, reaction to Accenture's muted guidance, whether that's over and done or not. Well, what it's telling us today is that probably not, because that's the next event that the market is moving towards. And there is some trepidation, there is some unease around IT. But look at the broader market, the happier part of the index, because it's not just PSU stocks today. We've got a lot of new names and large mid-caps that are doing quite well. Case in point would be something like an Interglobe. It's having a field day today on a couple of positive brokerage notes. 6% higher there, of course. Then you have the insurance plays like Max Finance, which have been doing really well. Even otherwise, I mean, there's Avenue Supermart. There are a couple of names like Torrent Power doing very well, widely tracked stock, and it's something that people really look at when they're looking at power. So I guess it's not too bad. It's just that you have to pick and choose, and few stocks that are having a good session today.
Well, that's right. And the flows picture as well is leading a couple of these stocks high. As we mentioned earlier this morning, Mankind Pharma, yes, there was a large trade that took place, but because of that large trade taking place, there'll be higher free float. Because of that, it's a possibility that it gets included in the MSCI. So we're down closer to 3.5%. Now the street is factoring in that inclusion in May 2024, and because of that, there is some buying at lower levels. I was looking at a Nuvama alternate note, and they're expecting even higher levels in the near term. So that's one stock. The other one is Shriram Finance. In the next couple of days, we'll have a rejig on the Nifty. It was announced earlier, but now the street will be doing the final few adjustments on that. So Shriram Finance is a stock that's moved to the high point of the day, because in the next 2 days, you'll have Shriram that will be entering the index, and you'll have UPL that will be moving up. So pull up that stock as well. It's moved to the high point of the day as we speak. Some part of that adjustment taking place, and we had told you at the start of the series itself that one's going to be moving all through the trading, all through the series, and particularly towards the end when the final adjustment does take place. Well, let's get back to the index. How do you trade this one? Mitesh Thakkar joins us. Hi, Mitesh. Good afternoon. Well, a quiet trading session to say the least. The Nifty hasn't moved much. The Nifty Bank, the 47,000 mark remains elusive. Your take first on the frontline indices.
Good afternoon. I think both the indices are still, contracting and not showing signs of expansion. So not a very positive setup. It's just a range-bound thing after a pullback which we saw in the last two sessions of the previous week. I think the Bank Nifty has got good support around 46,550, and then you can see 46,950 on the upside as the immediate level. And on the Nifty, it's about 21,950, 900 zone to about 22,100, 120 zone. So the range is contracting further slowly. Not much shade on the index, but on the stock side, Voltas can be bet on the positive side. Buy here with the stop below 1,080 for targets of around 1145. And the other one which I like, is HAL. They're showing good strength. So 3250 being the stop loss, buy for targets of around 3,400.
Mitesh, your morning call on Indus Towers has worked out very well. Indus Towers is up close to about 4%. Perhaps the upgrade by UBS on Vodafone Idea and the increase in target price on Bharti Airtel and the fact that they are expecting a 10% tariff increase as soon as Q1 of FY25 could also be helping sentiment on Indus Towers. That's also a play on telecom, but Mitesh had flagged it off as one of his technical picks at 9:10. But moving on to insurance, that's the big story. It's a big relief for life insurance companies. The regulator IRDAI has approved a graded surrender value for the companies. Yash joins in with the details. Yash.
Well, Rima, the fear of higher surrender value and hence a meaningful impact on the margins of these life insurance companies has been entirely negated by what has come in terms of final regulations from IRDAI on the surrender value. Very quickly, what is surrender value? It is the value which life insurance companies have to pay to their policyholders in case of early surrenders of policies. Now, in a nutshell, IRDAI had proposed in December 2023 to increase the surrender value and meaningfully increase by as much as double of what it exists today. Now, in the final regulations which came over the weekend, the regulator has again gone back and decided to keep the surrender value at the same levels which we function with as of today, entirely removing the downward bias on the margins for these life insurance companies. Now, to quickly put some numbers to this, as far as surrender value is concerned, in the second year of the policy is surrendered, life insurance companies will have to pay a 30% surrender value. This was proposed to be 83% earlier. In the policy which gets surrendered in the third year, the surrender value will be 35%. This was proposed to be 84% earlier. In the policy which gets surrendered between fourth and the seventh year, the surrender value proposed is 50%. This was earlier proposed to be 88 to 93%. Just to put some numbers to it, if for a 1 lakh annual premium policy, if it gets surrendered in the second year, what has come in the final regulation is a surrender value of just 30,000 rupees. This was proposed to be 83,750 rupees earlier. In the fourth year, it's come at about 1.5 lakh rupees versus 2.5 lakh earlier. Fifth year at 2 lakh rupees versus 3.5 lakh earlier. So a significant watered down version of the fearful, draft paper which the regulator had proposed. Now, interestingly, most policies get surrendered before the 7th year, and if the surrender value is kept at the similar levels under 7 years, then there is no meaningful impact for these life insurance companies and hence on their margins. Now, this particular proposal from the regulator, or the final regulations rather from the regulator, is being cheered by HDFC Life and Max Financial Services the most, simply because of their higher exposure to non-participating portfolio, non-participating business where most surrenders happen. Now, this particular proportion of non-par is significantly lower for companies like SBI Life and LIC, and hence those two stocks are flat to down in trade today. Out of HDFC Life and Max Life, Max is cheering this particular regulatory change the most, simply because it's got valuation comfort along with the positive regulatory development which has come for the life insurance sector.
Okay, all right. Yash, thank you very much for getting us the latest. Finally, I guess this is an issue which has been put to rest. Final norms are out and they're not that onerous for life insurance companies. Well, let's take this up with our next guest on the show. We have Sudeep Bandyopadhyay joining in from IndiTrade Capital. Sudeep, good afternoon. Good to have you on. So, what do you think? At least one regulatory overhang is out of the way and it doesn't pinch too much. I mean, given what Yash has been telling us, and we spoke to some insurers as well. Would you look at fresh purchases, buy in fresh into any life insurance stock?
Good afternoon, Surabhi. I think definitely it's a major overhang which goes out of the way post this final norms coming out. the surrender value part was a settled thing for a very long time. Suddenly changing it and increasing it by such an significant amount which was being proposed would have definitely impacted the margins significantly. Now that overhang is out of the way. They have a stability as far as the surrender values are concerned, and the companies with the least, the maximum amount of participating policies will benefit the most. So, absolutely right. Max and HDFC Life will benefit the most out of this. And naturally, the market is cheering these two stocks today. As far as buying into life insurance, I have been always positive as far as life insurance companies in India are concerned. I think the penetration is, grossly low. And there is significant tailwind behind this sector. And this is going to continue for a very long time. I also believe that somebody buying into life insurance should look at medium to long term. There is absolutely no meaning in buying for a short term. So if you are participating in capital market, you should allocate a part of your corpus towards life insurance stocks. And that should be, in the long run, proven to be a very, very good investment. So, at current valuations, current market prices, one can go and buy SBI Life, one can go and buy even Max Life. I think both of these are absolutely right for buying at current levels.
Sudeep, afternoon. What about Avenue Supermarts? The stock has been an underperformer, but now ICICI Securities believes that, the valuations are attractive. They go on to say that in Avenue Supermarts, valuation premium to Nestle was earlier 50% and now has come down to 8%. And therefore, after a long period of underperformance, maybe it's time to look at Avenue Supermarts. They've gone ahead and increased the target price to 4,800. Do you expect, the earnings? Do you expect the stock to do well?
Well, good afternoon, Rima. I've not understood. I saw the report and I haven't understood the logic of Avenue Supermarkets being compared with Nestle. Yeah, you can take two sets of data and compare and find ways probably to kind of look at value. Fundamentally, Avenue Supermarkets is a good bet. Unfortunately, they have not been doing well. And there have been a lot of comparisons between Trent and Avenue Supermarts and how Trent has moved up and Avenue Supermarts have stagnated. I think that will be a more apt comparison rather than comparing Avenue Supermarts with Nestle. So I won't read too much into this report. There is competition, and competition is really coming from all sides, whether it's a Reliance Fresh, whether it's a Star Bazaar of the Trent, or the quick delivery guys like a Zepto or a Big Basket. So competition is all around. So they have to really keep be on their toes all the time, and the margins will probably be under pressure for considerable period of time. Having said that, I think it's a very well managed business, but I won't probably rush to buy Avenue Supermarts at current levels. I'll wait and watch and hope for performance to improve significantly from here before I look into buying this.
Okay, wait, buy, and then only we'll get in on Avenue Supermarts. All right, got that, Sudeep. Well, let's focus on a couple of other stocks in the broader markets that are doing well. Skipper's a stock in focus. The stock is strong today. Vamakshi is here with details on the report that came in from InCred earlier today. Vamakshi?
Well, absolutely, Nigel. The stock is soaring, and how InCred has initiated coverage on Skipper Limited with an ad rating. They've given a target price of 400 rupees per share. And why Skipper so positive? Well, a couple of factors. The first one being the opportunity that they're seeing in the T&D space. They believe that the T&D space is showing signs of a rebound after a nearly 2-year slowdown. In fact, domestic transition line order placement activity is expected to pick up, which in turn provides visibility for Skipper. In fact, Skipper is actually poised to capitalize on this opportunity, given that it is among the top 10 global T&D structure makers. Apart from that, the second factor is the renewable energy thrust. Now, we all know that India is targeting nearly 500 gigawatts of renewable energy, and in fact, to ensure successful integration, it is important to have a very strong transmission system in place. In fact, IEA, which is the International Energy Agency, is expecting a nearly 50% jump in the global grid spending over the next 10 years. The third factor is that T&D and infrastructure businesses of Skipper Skipper Limited are on a high growth path. In fact, the order book has seen a jump of almost 2.7 times in the last 2 years, and this was largely led by a large order received from BSNL recently. In fact, InCred believes that the company is expected to maintain consistent margins going ahead. They're expecting the company to post a healthy revenue CAGR of nearly 28% till FY26. So given all of those factors, InCred has initiated coverage on Skipper with an ad rating, target price of 400 rupees per share, and that is the reason why the stock is surging in the trading session today.
Okay, all right. Mamakshi, thanks a lot for that. Can't resist this one. Sudeep, what do you think of this one? Skipping today. It's up close to around 8%. The stock actually was, I think, at around 360, 370 rupees prior to that bit of a meltdown that we saw in the broader markets, and then it corrected 250. And last few sessions, it's bounced back. And today, in fact, it's seen a bit of a bounce because of this InCred report. Any view on it?
Well, I think, very clearly the report is doing its trick. The excitement has come back to the stock predominantly on the back of this report. I'm not saying the rationale is inappropriate. I think it's a very absolutely well, kind of analyzed and well researched report. And I think there is merit in looking at companies in this space, including Skipper. And definitely there is a traction and a tailwind behind this company. So yes, Skipper is good. One more interesting thing, Nigel, I think today pretty much all the stocks which are moving are on the back of some research report or the other, lack of major other cues, and being a truncated week with very little trading interest. I think the research reports are doing the trick today.
All right. What about one stock where there is no research report? Hindustan Copper, no official coverage out there. We know that prices globally could remain firm because of higher use of copper, deficit in terms of supply, demand is likely to remain strong, and maybe the Fed goes ahead and cuts rates. Then you'll see LME prices move up on the whole. And there's only one pure play, Hindustan Copper. But they're not doing 1 rupee EPS on a quarterly basis, but that may not be the way to look at it, because in the coming years, the street is factoring in that earnings improve dramatically. So the stock is at 280 rupees. Your view?
No, absolutely, Nigel. I think this is a good stock to acquire for kind of medium term. And apart from all the factors you listed out, I think there is also this excitement around some kind of stimulus, some kind of excitement coming from the Chinese market as well. And if that happens, I think this will be an icing on the cake. The strong demand of copper and that I think is propelling this entire bull run or the positivity in copper. I think Hindustan Copper being the only pure play copper company in India, I think that's one which should be looked at. The other company which one can look at, and I believe it's worthwhile looking, is Vedanta. There are multiple, governance and other challenges, and we all know about it, and we've been knowing about it for years. But the combination of the stars at this stage probably favors Vedanta, and pretty much all the metals they are in for good time for some time. And I think the debt overhang on the holding company level is also out for some time. So one can look at Vedanta, which also has a significant copper presence.
Okay, so some metal stocks in focus and the ones that Sudeep likes. Sudeep, let me ask you about Interglobe Aviation as well. You were talking about brokerage commentary moving stocks, right? It seems Interglobe is another one added to that list. It's 6% higher. They had an analyst meet, and I think some of the brokers are quite enthused. They see better earnings ahead, and it's a virtual monopoly or duopoly, I think, in the skies right now. But the stock has also rallied. What's your take?
I think, the company is doing undoubtedly very well. And I think this is one company which has probably become a case study for aviation companies around the world, how to manage costs and continue operational excellence. I think that's definitely, we should give that to the company. But having said that, there are a couple of things. I'm always a little skeptical about aviation stocks. There are too many variables which are beyond the company's control normally, which the main one being the aviation fuel cost. And that changing of that, I think can, put all the calculations out of the window. So one has to be careful about that. Second, I think finally, at some stage in the next quarter onwards, we will start seeing some amount of competition. The aircraft deliveries of Indigo are also supposed to accelerate which, while the demand is there, probably will lead to some kind of pricing pressure on the back of the fact that Air India also will start getting delivery of fresh aircrafts. So the number of aircrafts will suddenly start increasing exponentially in Indian market week on week. And under the circumstances, I'm not sure how long the strong demand scenario will hold. Today, it's a seller's market. I think there is so much demand today and so limited number of aircrafts. Indigo can command a price. Tomorrow, when the situation changes and there are more aircrafts on ground, let's see what happens then. So I'll be a little careful. It's a good company doing very well, but I don't think I will recommend a buy or jump into buying this.
Okay, Sudeep, do stay on. We need to slip into a very short break. Just one more stock, Flair Writing. This is one stock which has seen very strong subscription towards the end of last year. Overall subscription was 49 times. Issue price was 301. On day one of its listing, the stock went on to hit 514. And from that day, after its opening, the stock has actually been trading lower and now is nearly 50% off, from its 52-week high of 514 that it hit on day one on its listing day itself. So today it's up 1%, but as you can see, it's come off quite a bit. Sudeep, do stay on. We need to slip into a very short break. On the other side, we'll talk more about diagnostic stocks, what's firing them up. We'll also invite Tushar Pradhan of Hexagon Partners on the other side.
Welcome back. The markets have moved to the low point of the day. Now the 22,000 mark has briefly gone breached. Pull up a few stocks. HUL, that stock seems to be losing its way. There's a hope that it bounces off post this underperformance, but that stock is a rather larger weight and that's come in lower. You have Infosys as well that's struggling a little bit. So that's another stock that's not doing the Nifty any good as we speak. So pull up the intraday chart of Infosys, another larger weight in there. And that seems to be pulling down. It also maybe pull up the Nifty Financial Services Index. It's got 40 minutes till the contract expires. So that one should come up for you on the screen. Nifty Financial Services Index, that's the one. Being naughty, 20,700. Some of these contracts will expire. So expect some kind of volatility. I tell you what, if 20,650 holds out, then maybe there's a chance that it sees a bit of a bounce. So just hang in there and just watch out for that particular mark. But Ekta joins us to tell us about a Kotak note on diagnostic companies. It's clearly got them excited. Ekta, what are they saying?
Well, yes, Kotak is quite positive on the entire diagnostic space. In fact, they've double upgraded Dr. Lal's from sell to add, and they've raised the fair value to 2,360 odd rupees. For Metropolis, they've raised the fair value to 1,600 rupees, but they maintained their reduced rating there. given fair valuations. According to them, there's increasing price sanity in diagnostics over the past 1 year. The latest pricing exercise across 7 cities suggests further improvement in pricing trends. Most large incumbents, according to them, have raised prices by 5% over the past 1 year. Metropolis has raised prices by 5% on a Q-on-Q basis. Agilus has raised prices across 7 cities by 7% Q-on-Q in Q4. Pricing for Dr. Lal's, Thyrocare as well as Vijaya has remained largely unchanged during this time. But remember that most of them have hiked prices over the past 1 year. Lupin has hiked prices by 12% Q-on-Q. Aster DM, MedPlus has tweaked their pricing in certain areas such as Hyderabad by 1 to 3%. Apollo has not taken any significant pricing action in FY24, but this is because they raised prices by 2x nearly in early of FY24. Now, pricing differential of listed incumbents with online players stays elevated according to them, which is at anywhere between 2 to 2.6 times. Increasingly benign competitive landscape alleviates any major concerns on structural volume growth as well as margins of Dr. Lal's and Metropolis. So they seem quite sanguine on the pricing front, and hence you're seeing the stocks higher.
Thank you, Ekta, for that. Sudeep, weigh in on the diagnostic stocks. After a lot of undercutting, months and years of undercutting and pricing pressure, it now appears that some rationality, sanity appears to be emerging. There are some price increases that have been taken. Is it time to look at diagnostics?
Rima, it's absolutely right that there is sanity returning to this space. There was massive amount of undercutting happening, and that has stopped. And they have taken, small hikes in prices as well. But I would rather wait and watch. I think, the valuations are still at an elevated level. Even the research report is talking about valuations which are close to current market price only. So fresh buying at current levels may not be recommended. One also has to remember there is significant pressure from the online pharmacy companies also, who are also providing some kind of diagnostic services at a much cheaper rate. So competition do exist. And the scope for further price increases will be limited. Under the circumstances, they will have to depend on natural volume growth for increasing their profitability. But the margin expansion from here on may be difficult. So I'll wait and watch.
Okay, all right, got that. Sudeep, thank you very much. Good to have you on the show as always. Thank you for all of that perspective. Well, the market is right now, Nifty is nursing about a 100-point cut. Mid-caps doing better, but it's larger mid-caps and more at the index level because remember the broader market breadth is still quite negative today. That's the shape of the market. Tushar Pradhan is our next guest on the show. He's joining in to give us his views on how things are stacking up right now. Tushar, great to have you on. Thanks for joining in. And you're joining us in your new avatar, director at Hexagon Partners. So welcome to the show in that new avatar. So what have you made of things and this broader market consolidation and cool-off that we've had? I think even now, if we see the screen, for instance, today, it's still the larger mid-caps which are finding takers. Do you think the worst of the shakeout is behind us, or are you expecting more ranging action beyond the Nifty?
No, I think this time it is probably going to be something which is a protracted volatility era. I don't think we're going to settle at any level. Since we've had a significant up move throughout the last year, and clearly there are pockets of over enthusiasm in mid caps and small caps, I think the market is going to take a long time before it can settle down, because I think wherever the market finds some kind of balance, it is always a rational PE that it will trade at. And there will be many times where such a rational PE will take some time to come, because the earnings have to catch up. And once the consistency of the earnings is settled, I think that's the only time that you'll see the market, which is slightly much more less volatile than what we see now. But my prediction is that this year is going to be volatile. There will be news-led, upsurges and drops, and sometimes pretty sudden drops as well. So be ready for some volatility.
How would you construct your portfolio to tide over this volatility? Tushar, hi, afternoon.
I think the best way to secure yourself in a volatile market is probably go towards quality. So whether it is large cap, whether it is quality mid cap, or something that you truly believe in terms of the valuation comfort, even in a small cap. So I don't have any specific choices between large and mid cap, but I think quality per se will clearly be a lot better to hold on to during such periods. There is also a lot of froth around the expectation of explosive earnings. And any disappointment, whether it's on a quarterly basis or even on a more structural basis, is likely to lead to disappointment. So I think one should construct a portfolio being assured of the kind of consistency that they see in the earnings growth of the companies within that, rather than just taking a chance on whether you'll be safer in a large cap or a mid cap. I think the quality of earnings really is the one thing to look at.
Which are the sectors which are most susceptible to a earnings disappointment? You spoke about froth in terms of, earnings expectation. Where might we see some sort of a earnings downgrade, and therefore those would be the sectors, themes that you would, keep away from, avoid?
Yeah, I think it's always nice to kind of bracket everything by sector, but I think there is a certain amount of overvaluation across the board. So even within a sector, you will find certain companies trading at multiples above 70 times or even 60 times. And in the same sector, you'll find certain companies trade at between 30 times to 20 times. So I think the real issue here is not an absolute valuation, but the expectation at which these valuations are trading at, and to double check whether those exist. I think in terms of the defense companies, we have seen a significant amount of overvaluation there. Of course, the orders are there, but as usual, the defense companies' cycles tend to be multi-year. So maybe some of that has already been priced in some of the prices that we see today. That's one sector that comes to mind. But again, mind you, I'm not saying that unilaterally to every company within that sector. I think there are reasons to kind of be selective. There are other pockets of overvaluation where I worry about, especially in the real estate sector. And also in some cases, I would say even in the NBFC sector. So I think given all of these, again, as I say, making a blanket statement might be dangerous. So one has to look at individual valuations and then decide for oneself that, yes, this is an expensive stock. How much do I believe the growth story to be, and whether I'd be comfortable with the valuation.
Hi Tushar, good afternoon. Good to see you in. Tushar, what's your view on tech? Accenture came out with a bit of a howler and the street was disappointed, but actually the stocks from the lows that we saw on Friday did see some bit of recovery. The problem is that, some part of the street was factoring in an uptake in discretionary spends, which would be good for the likes of LTI, Mindtree, good for Infosys, Wipro, which may not happen. How would you approach them?
No, IT, I think, is since it's very linked to the United States and its economy and what happens to the election year that we are going to see, and what are the issues regarding immigration, which is one of the burning issues for the election this year. I think all of that seems to be tied up in some way to the valuations in IT, because clearly, I think the happy story about how Indian IT services companies made their inroads into the US by having a very large number of people who were to be hired and then placed in the US for their services delivery. I think that picture is a little bit under some cloud given the constraint around immigration and the policies therein. There is the possibility of a soft landing in the US, which means that if there is any situation where they believe that demand may not be that strong, it may have an impact on the IT budgets for most of the larger companies going forward. However, on the balance, you have AI and all of that associated technology era where they are not going to be hemmed in by any industrial slowdown or, for that matter, any immigration policy at all. So we are looking at a very interesting picture where we are unsure about which company is going to take advantage of the vectors of growth as we see from here. It is not going to be the same market that we saw in the past few years. So what got us here in terms of where the valuations for most of these companies have come from is not going to take us forward. So it's going to be very, very selective. And I think, to be fair, I think most of the environment is not yet clear in terms of who will be the winners at this time. I would think a more diversified approach to having an exposure to IT across the board would be a safer bet.
Okay. So more diversified approach to IT. Tushar, what about the overall market and your overall portfolio construct? It's also true that this market has had a one-way move from 2020 onwards, and you just mentioned that you're expecting more volatility. It's unlikely to be that straight parabolic one-way rise. So in that context, what are your top, at least thematic or sectoral overweights?
I think it's very clear that we are going to have a manufacturing revival in this country. So anything related to broad markets, which possibly include infrastructure, main infrastructure, as in even roads, etc. But if I expand that into general manufacturing, I think there is a reason to kind of get invested in companies which manufacture hardware, electric systems, power systems. I mean, it's a very broad range. Not very exciting, not something that a lot of investors have looked at recently because the more exciting sectors seem to be away from these. But I think those are the more stable, I would say, parts of the economy where the earnings growth seems to be fairly secure. One has to be a little bit more diversified. So I would include one of my favorite sectors, which is the financials. But again, within the financials, there is such a choice that one kind of gets confused, and they tend to believe that it's only the banks and the NBFCs. But I think beyond the banks and the NBFCs, there are some very interesting companies, especially in the insurance sector, the life part especially, as well as some of these very interesting fintech companies, which at some point of time will become pretty large in the universe. So I think, again, the emphasis I want to keep is that while some of the more traditional sectors and companies are likely to do well in the next 1 year or so, also keep a lookout for these non-traditional kind of companies, which may surprise us by building generation of earnings in the next 1 or 2 years. So it's quite an eclectic choice. I think the standard norms of saying, okay, which sector now may not apply. I think we may need to put a lot of brains behind trying to find the next new winners from now on.
Okay. All right, Tushar, we'll leave it on that note for today. Thank you very much for joining in and giving us your perspective on the market. By the way, those are interesting flashes coming in from Z Entertainment, 20% EBITDA. Is a monthly management mentorship program. Guys, I guess this would be very routine for most companies. Most boards and managements will be working with their own internal targets. I mean, pretty much, straight on course. But I think here, this is a company that's trying to rebuild investor confidence, trying to tell the street that even without a deal, we are on track and we are going to, set this house in order. I guess in terms of today's stock price reaction, doesn't seem to be helping, at least that commentary coming in.
Street will want to see more evidence of that before reacting. So it explains why Street is not reacting to this piece of news at all.
They want to see the numbers.
Yeah.
Okay, all right. We'll take a break on that note, come back on the other side and get you more on the market. So we also have a big announcement to share with you all. We're launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate Personal Finance Handbook with Sonia Shenoy, where she'll be joined by 3 well-known experts on Saturday, the 11th of May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. So there's lots to learn, whether you're in your 20s, 30s, or even 40s. This live webinar is for you. We have limited seats, so don't miss this chance and register now. You can scan the code or log on to cnbctv18.com, and we'll see you on the 11th of May. Well, the market's been in a sort of subdued mode after the long Holy weekend, reacting to perhaps the pause that we saw on Wall Street as well. So it's a good time to get you a big view on the street and what lies ahead. I caught up with veteran investor Ramdev Agrawal to discuss the portfolio construct for the medium term, given the recent volatility and the fact that we've had this first sign of a cool-off in the broader market. Ramdev says the Nifty can actually double in the next 5 years and one should remain invested in the market. That's his big message and takeaway. He also likes sectors like capital market-related plays, real estate, defense and power. These are likely to be the key outperforming themes for the next several years. By the way, towards the end, he also shares his take on HDFC Bank, given its recent underperformance. Take a look.
See, first thing is you should remain allocated. Staying out of market is not going to help because we don't know, as we are talking, market will be up 2% or down 2%. You know, it is that kind of momentum is there. So you be allocated because the long-term outlook is very good. I have stayed in the market for 45 years. I mean, I'm really grandpa of this market.
You started in the 80s, right?
1980. 1980 when index was 100. Sensex was 100. I have seen index growing by 7, 27, 30 times. Ex-dividend. Come dividend would be almost 1,000 times.
Wow.
Forces are gathering pace to favor India. So my sense is this journey is going to be most exciting journey. Now here, how do we look at things? How do we develop themes? Where are the big trends?
Yeah.
So which are the early trends and where things can be big? Like say like capital markets, I said. It's just 2-3 years old trend.
Right.
I think if we are going to go from 150 million to say 500 million in next 10 years, I think we have...
So there's a long runway
and it's a very consolidated business, mind you. Yeah. It's not a very spread out business. When we started in 87, the turnover was 200 crores per day. And there were 500 brokers, they were not able to settle the markets. Today, we are doing, do you know how much we are doing? 400 lakh crores per day.
Total turnover.
Total turnover.
Yeah.
And there are only 50 brokers.
So it's a real explosion that's happened in the capital markets.
And it's still growing at 50%.
Sure.
So I think we have whatever is digitized, I think it just scales up like mad.
So that's one big theme.
Yeah.
Let me ask you about the themes that are already now about a year old and get your sense on whether there is more steam or not.
Should be. The auto is doing well, capex is doing well, defense is doing well, medical is doing well. So those are the things which are trending very well. But the real fun is buying something which is not trending well right now or at a very early stage, but eventually is going to become very large.
And do you see something like that?
Of course.
So if you could share, not stock names, but just ideas.
So say real estate. Real estate was in dumps say 3 years back. And now they have got up and growing, but still it's the early stage for them. They are repairing the balance sheet still. But this sector, along with the stock market, can become very large because still the housing is not done. And as you become rich, I mean, the biggest growth sector is going to be real estate.
Because you want to invest in a house.
So now the issue is that how they use the power of market cap, power of their valuation to speed up their project execution and give better value to their customers.
But what about the stocks? Do you still find value in real estate stocks?
You are the investor, you have to figure. I am telling you the broad trend in the economy, broad trend in the sector. From there you can find some small cap in Chennai or, I mean, every city has their own real estate company. And brilliant guy could be there. So you have to find those stocks and invest in them. Of course, large cap, DLF, your Oberoi, your Lodha, and those things are listed. You can really go and see what is happening there.
Absolutely.
So that sector can be very large. Defense expenditure, infra expenditure, auto expenditure. I mean, actually, when the economy booms, literally every sector participates in that. Someone's like capex is going to be a very big thing as we go forward. Very big means seriously very large.
So, I completely understand where your optimism is coming from because when we talk to these companies, the managements, they talk about their order books, they talk about the opportunity, they talk about government spending. But just broadly speaking, in terms of how much the market has already discounted, whether it's defense, whether it's capital goods, there is energy transition, power now, I mean, there's so much of even thermal capacity being added.
Your fossil fuel transition, your wind, solar, those things are not even started.
So even in terms of valuations, there's still comfort?
Don't worry too much about why you are so obsessed about valuation. पहले आप समझो सही क्या चीज value कर रहे हो आप. You size it up. I mean, we cannot size up in this 10 minutes. Every company you have to go and figure out what is the prospect for the company, what the company is going there. Go and understand. Stay 2 days with them. Then you'll understand some sense of it, what is there.
Sure.
So markets are not very good in discounting very long term. They are very good, in fact, where they're very excited about the short term. And they have no clue about very long term. No clue at all. And that's why you make money. You see in HDFC Bank or even Infosys and all, you made money back-ended, not in the front-ended. I mean, in 96, 97, it is very clear HDFC Bank is a winner. Or even 2000 it was winner. You see after that what has happened. You got 30% return for next 20 years. How come?
And now?
So now, yes, the story still remains same if you understand. Yeah, I mean, this is a time to really go and do research and figure out what is the future of it. Are they going to lose market share? Or are they going to build on the market share? Because the credit growth or the banking needs of the country is going to grow at 15-16%. So the whole call is if they keep going market share, they will grow 15% plus. 15 ka premium aapko milta hai.
That's a very, very bullish sounding Ramdev Agarwal. But he also says in the earlier part of the interview that corrections will come. You cannot guess when and why, but don't be too perturbed. Stay invested for the medium to long term. And that's when, Nigel, he's saying the Nifty can double. And then he lists out all of these sectors that he sees are sort of big defining trends that you must see a reflection of in your portfolios.
Well, that's right. Good one, Surbhi. Well, you can keep catching excerpts of that all through the day on with regard to that interview as well. By the way, before we move on, just pull up a few stocks on the broader markets. You'll see, well, the Nifty is down 100 points approximately. Torrent Power, the stock is up 8.5%. Just take a look at the massive move we're seeing out there. Indus Stars as well. Someone's got stuck on the wrong side over here because the stock went down to around 230 rupees last week, where there was some talk that there could be a large trade. Just pull up a last 1 week chart. You'll see the stock has moved up. It's a large size stock moving from around 230, 235 all the way to around 285. So massive move is what we're seeing. Just take a look at those lows. 230 odd in the last week or so. Mitesh Thakkar is back with us. Mitesh, what's the view? I mean, it's going to be a bit of a down day. Par for the course, I would say. But your view on that as well as your trading picks?
Yeah. So I think, it's a down day, but not by big margin. We're still in that range, though. I think, we are closing towards the lower part of the day. We kind of had a negative opening and then we bounced back from there. But the entire bounce back is getting washed into. So not a very positive setup. I would, avoid longs on the index and look at maybe trades on the individual stock side. I think Astral Pipes is something which has come on the radar right now. That's something which is now near the day's high. So BTST here with the stop below 1970 for targets of around 2030. And STVT on Bata India with a stop at about 1380 for targets of 1355.
Okay. All right, Mitesh, thank you very much for that. Those are some trades that you can work with. Now, important changes will be implemented in the NSE indices from the 28th of March. What are these changes expected? Vivek is here with some ideas and some number crunching around this. Vivek, fill us in.
Well, that's right. Good afternoon. So, what we're actually doing is it's a reminder to our viewers that, some of the NSE indices will have a fresh look. They'll have new constituents come 28. So the first one, is the Nifty 50 itself, like, has been reported earlier. Shriram Finance will replace UPL in the Nifty 50. So in tomorrow's trading session, there will be some inflows that will come in from passive funds that actually track the Nifty index. So Shriram Finance flows of a little over $150 million tomorrow. UPL will see outflows of a little over $85 million. Now coming to the Nifty next 50, quite a few inclusions over there. Geo Financial will, grab the bulk of the inflows, almost over $80 million. And some of the other inclusions are PFC, Adani Power, REC and IRFC. All of these stocks will see inflows. On the other hand, from the Nifty next 50, what will make way for these inclusions? Shriram Financial, PI Industries, Procter & Gamble Healthcare, Muthoot Finance, and as well as Adani Wilmar. These are stocks that will be moving out. Apart from these two, Nifty Bank will also see some weight changes that will happen. No changes as far as constituents are concerned. So there will be some weight increases in HDFC Bank and IndusInd Bank, and some weight decreases in SBI, ICICI Bank, Axis Bank, and Kotak Mahindra Bank. As far as the CPSE index is concerned, that too will see some adjustments tomorrow. So some inflows is expected in NTPC, NHPC, and NLC India. On the other hand, ONGC, Coal India, and BHEL will see outflows in tomorrow's trading session.
Okay, thank you very much for that. A little more than 10 minutes left for the markets to come to an end today. We'll slip into a break. On the other side, we'll be joined by Jay Bala of CashTheChaos.com. Stay tuned. Welcome back. It's exactly 22,000 on the Nifty, a 100-point knock. Sensex down 400 points. IT once again is under pressure. Remember, the Nifty IT index was down 2.3% on Friday, and it's followed it up with further weakness. The index is one of the big drags today. The Nifty IT index down 0.6% at the day's low, with names like Wipro down close to about 2%, Infi, TCS under pressure. The only one in the large cap IT space which is in the green right now is HCL Tech. The rest of the pack is quite weak. Jay Bala from cashthechaos.com is with us on the show. Jay, last week, towards the end of last week, markets were showing some signs of bottoming out, at least in the near term. How have you read the price action?
Hi. From last week, the markets haven't done pretty much. Probably it's doing this choppy price action due to the shortened week, and there has been no significant movement in the market from the point of supports and resistance. So still, 21,530 remains the very important support for the medium term for the bulls. From a very short term perspective, 21,880. That's a very important support. So it's as long as the markets aren't dropping below that, the existing trend persists. But my anticipation is that these supports will give way, but I'm not preempting the market. I'll wait for these supports to give in, and then I'll take action.
Okay, got it. Hi, Jay. Good afternoon. Good to see you. Jay, what about individual stock trading ideas? Fill us in.
Yeah, continuing from my idea of last week, I'm bullish on downstream oil names, BPCL and HPCL. Those are the two picks for me. BPCL slightly less bullish, HPCL more bullish. The recent dip from the January, to the recent low seems to have been looking like a complete correction. So, a stop loss below 550 for BPCL for an objective of about 702, and HPCL a stop below 440 for a price objective of 610. So, HPCL is slightly more bullish than BPCL, but, these are PSU names and elections are ahead. So, allocate lower. The government can tinker with, prices. So, be a bit cautious, but bullish on it.
Okay, bullish on some of these oil marketing companies. Infi down 11% this month. Wipro down 7.5%. Anything in IT? Is it headed lower?
I've been pointing out for the last few weeks that despite TCS clocking fresh 52-week highs, I've been saying that, the whole IT sector, particularly the frontline heavyweights, they are looking suspect. And, it's below, the IT index is below 36,200. If 34,200 were given, I would think that the move from the 2023 low of about approximately 26,000 for the Nifty IT, that would have come to an end. So watch out, 34,200 is a very critical support. And, that IT index will probably give fillip to the bears and join the banks in being contributing to the weakness. So 34,200, very important.
Jay, stay on. Earlier today we had a chat with Harish Krishnan, EVP, Senior Fund Manager Equities at Kotak AMC. Listen in to excerpts from our conversation with him.
There's been a small correction for sure, but we've still come back to levels which were there in, say, December of 2023. So such has been the extent of the parabolic move that we've seen that, this correction, while welcome in terms of clearing away some of the froth, when the index corrects by about 10-12%, a lot more stocks fall anywhere between, say, 20-30%, and therefore it provides some opportunities for us to add on to some exposures across various sectors. We are a lot more circumspect on both of these. So if you look at, say, defense, and I'm just talking about index level, say NSE index on defense is trading on a price to book of close to about 10 times. It is even higher than the price to book of, say, the NSE consumption index. Now, these are very rarefied entry level multiples. The current valuations pretty much cap out any prospect of further medium term value creation. So we are a bit circumspect on both of these within the broader PSU pack.
Well, let's get back to the conversation we're having with Jay. Jay, I wanted your view on crude. That's getting to an uncomfortable stage right now. The refining capacity has come down. There is some geopolitical issues as well that are again being raked up. And that's an issue for India because, you don't want crude to go past the $90-95 per barrel mark. Your view around this $87 per barrel?
Yeah, I've been pointing to the possibility of a breakout in both varieties, and they've had a breakout recently, and I pointed that out on the 1st of March through my tweet, and they are probably heading towards $96 to $98 by Brent in particular. So, approximately $12 from higher from current levels, and that's probably the reason I'm getting buy setups on oil marketing companies. So probably in sync with the crude price movement. So I'm looking at a higher crude over the next couple of months.
High crude prices in a couple of months. Any particular chart patterns on the US indices?
Yeah, they are. There's a ending diagonal on the US indices too. We had discussed this last week for the Nifty, and it's on the longer term pattern for the banking index too. So we want to see the Nasdaq close below 17,800. Once it does that, that will complete the price action that will point to a end of a up move. So we are waiting for the Nasdaq spot, not the futures spot, to close below 17,800. Once it does that, that will mark the end of the move from October of last year. And already the semiconductor index, which houses the AA stocks, is looking toppish. But we need confirmation from NVIDIA to print 823.
Bajaj Auto has been quite the stock of the moment right now. It's flat today, but this month it's seen a rally of 13%. In the last 1 year, the stock has rallied from levels of 4,000 now to 9,000. Where is it headed, in your opinion?
Yeah, if you recall, Rima, I've been bullish on two-wheelers name in particular within the auto sector since late last year. So sometime from October, I've been bullish on Bajaj, TVS, and Hero, and they've been doing phenomenally well. But right now, this new high is looking a bit tired and exhaustive. But wait for the markets to say that this is topping out. But it is looking a bit tired. I wouldn't put incremental money into the two-wheeler names here. But if you're having Bajaj Auto, you should keep a stop at about 8,400. If it were to close below 8,400, you need to exit.
All right, Jay, final question before we let you go. What about the dollar index? That cooled off to around 103 odd mark, but that's back at around 104. Where do you see that one headed?
Yeah, every now and then I always look at the opposite side of my view, and I'm bullish on the dollar index, and the most bearish view would even contend with a price rise to about 106.5 for the dollar index. So I'm much more bullish than that. So I think there is much more residual movement left for the euro cross and the dollar on the sterling, and the USD JPY is set for fresh 30-year high. So all pointing to much stronger dollar index. So I'm from a medium-term perspective, I'm matching much higher prices. And I've been saying that the October 2022 high is not the end of a dollar's peak. So we'll wait and watch. There are stages for the dollar index to cross 106.5, 107.2. Once that's done, it's all clear for fresh multi-year high for the dollar index.
Jay, thank you very much for joining us this Tuesday afternoon. Have a good day, counting down to day one of this truncated week, and we're ending with a cut. The Nifty is ending just above 22,000, but down 80 points. And a cut of close to about 0.5% coming in on the benchmark indices. The drag came in from banks. The Nifty banking index on the financial services expiry was down 250 points, 0.5% gone, with large cap banks like HDFC Bank, Kotak Mahindra Bank seeing a cut of more than 1%. ICICI Bank too ending in the red. Other notable losers include that in the IT pack. The Nifty IT index was also down 0.6%, Wipro 1.5% down. Infosys saw a cut of close to about 1%. Power Grid was weak in trade. Bharti Airtel lower by 2%. On the gaining side, some relief coming in for life insurance companies like Max Financial and even HDFC Life on the graded surrender value. So, the regulatory overhang is out of the way, and perhaps the street will, these companies will not see the margin hit the markets were fearing. So Max Financial is up 4%, but other than that, you had Britannia, Hindalco, NTPC, L&T, BPCL some of the gainers. But the action was in the broader markets, right? Pretty good green on the mid-cap index.
Well, that's right, Reema. Quite a few stocks flying around in today's trading session here. Torrent Power, that stock was up close to around 8.5%. Hindustan Copper up close to around 5.5%. Oil India was up close to around 5%. Max Financial up close to around 4.5%. So plenty of big movers out there. On the flip side, stocks that haven't been doing well, they continue to see selling. Case in point being Rain Industries, Delta Corp, as well as Z Enterprises. Well, for the time being, we'll wrap up on this edition of Closing Bell. But you don't go anywhere. Markets Forward comes up next.